Welcome to all my young adults. It's good to be with you guys again. I'll be breaking down another great company for you guys to look at. I do want to say this, your first dollar invested matters more than the next $1,000 you invest because it teaches you guys discipline. Yeah, consistency and persistency builds wealth for you young investors out there. Yeah, I got a great lesson for you guys today. I'm breaking down the company KLAC, another great company that you guys can be buying fractional shares in to build your long time wealth. I keep telling you guys over and over, you guys are young. If you just start investing now, buying fractional shares, you're going to have a whole lot of money in 10 years. You'll be walking off your job. Well, we're going to jump in and talk about the company KLAC. All facts sourced from KL, official filing, balance sheet. I'm going to talk about the balance sheet data and the analyst report. So listen up, young adults. There is a company that makes technology possible, and KLAC is that company. The behind the scenes powerhouse that endures and ensures every chip in your phone, laptop, car, and future AI robot actually works. Yeah, every chip in your phone, laptop, car, or AI robot. This company is the company that makes the chips and makes sure that the chips actually work. What does KLAC do? Well, KLAC builds inspections, metrologics, and process control systems. The ultra precise machine that checks for microscopic defects. Yeah, they check for microscopic defects on semiconductors, wafers. Without KLAC, chip makers like NVIDIA, AMD, and TSMC literally could not produce advanced chips. Yeah, the big boys got to have KLAC working for them. Think of KLAC as a quality control boss of the semiconductor world. The one making sure every chip is flawless before it powers the future. This is the company that makes sure every chip, let me say the word, is flawless before it can power the future. And some would say, what does KLAC look like in the future? KLAC is riding right now, you guys, the biggest tech wave of the decade. We're going to get into the charts a little bit later. We're going to look at the fear index, and then we're going to get into the charts. But I'm going to tell you guys, where it was under the Biden administration and where it is now under the Trump administration, and where we as young investors should be looking to buy and ride the wave into the future. We only have a few more buying days. We'll be going into May in probably a week or so. We'll be into the month of May. But what they look like in the future? Well, AI chips demand is exploding, requiring more inspection tools than ever. Yeah, all these big companies, a lot of them starting to build and make their own chips. But guess what? Guess who they got to go through to inspect the chip before they use it? Yes, this company right here, KLAC. Great company. There are two NM and advanced packaging dramatically increase processing controls intensify, meaning KLAC sells more tools per chip than all the companies out there. KLAC sets their 2030 target, check this out, of $26 billion revenue, 84 EPS, showing massive long-term confidence. That's what they're saying about this company. It's showing massive long-term confidence. This is a company positioned at the center of the AI manufacturing boom. This is why you guys need to be buying fractional shares in this company. And I always teach you guys, whenever you guys look at a company, we always want to look at the balance sheet. Yeah, the balance sheet. They have a total assets of 16.7 billion. Their total liability is 11.25 billion, and their shareholder equity is 5.47 billion. And I love this about this company. Cash, hardcore cash sitting on the sideline. And their short-term investments add up to be 5.2 billion. Cash flow on the side. This is a company with real money, real assets, and real staying company. Because I always teach you guys, we're not investing in little small rinky-dink companies. No, we investing in the big billion-dollar companies because we know that they not going out of business. And because they're not going out of business and they're going to make a whole lot of money, we get to make a whole lot of money when we buy fractional shares in this type of company. Matter of fact, why would you put your $50 in a company that you know that's not going to be there tomorrow, when you could be putting your $50, buying a fractional share of $50 in a big billion-dollar company that you know you're going to make money off of? This is what I want my young adults to understand. We invest in great companies with great balance sheets. That way we can go to sleep. And when the market goes down, buy some more. Buy on the dip. And I'm finna show you guys a dip in just a little bit. Ain't quite dipped down where I think it should be. But you guys can keep an eye on it because now y'all got some videos to go back to. And you'll catch it on probably a little bit more bigger of a dip because we still got to get this war figured out that this administration has got us into. Okay? So how much debt do this company have? Well, KLAC carries about 5.9 billion in long-term debt with a debt to equality ratio of 108%. High, it's kind of high but manageable because their interest coverage ratio is 50.7%, meaning they easily pay their interest. Yeah, easy. They can pay their debt easily. This company is not a company that's struggling to pay their debt. And matter of fact, some debt is good debt. But when you got cash flow sitting on the side, you can borrow and do a lot of things to help your company grow in the future. And this is what KLAC is doing right now. Yeah, yeah. And so I always like to tell you guys, what does the bear say about the company, and then what does the bull say? Yeah, well, the bears say that the stock might be overvalued. They say that KLAC PE and uh, uh, ratio is above historical average. They say that their geopolitical risk because China exports is in the game. Supply chains is what they think about uh, KLAC being the issue, the supply chain. Could they say that the supply chain could slow? And I can see why the supply chain is slowing right now. That's why we starting to see a little dip in it because, uh, you know, this Iran war and there's a lot of ships sitting over there in the water that can't move through the channels right now. And so it's causing the company to dip right now. That's why I want you guys to keep your eyes on the dip so we can get back in. And when the big boys up top decide to get themselves together and open up that little channel, that 21-mile channel that, all the big ships got to go through over in Iran. When that bad boy opened up, you're going to see this bad boy shoot to the moon. Buy fractional shares right now. You're going to be in good shape in the future. And then the bears also say that semiconductor cycle can cause temporary revenue dip. I already talked about that. Why the dip is happening right now. But good investors, we understand that this is a great company and we're going to buy that dip. Y'all keep an eye on it. We're going to buy that dip. I kind of think that, you put a little bit in your portfolio now and just every time you see it under what you bought it for, buy some more. You know what I mean? Buy some more. That way, when it shoot to the moon, us young investors, we're already in position. Okay. Now, what does the bull say about this company, KLAC? Well, the bulls say that they have top tier profitability. Whoa, I like it. They say that this company is a very profitable company. But not only is it a profitable company, but the bulls say it's a top tier profitability company. Yeah, they say that the ROA is 28.57%. And some of you guys say, well, what is the ROA? Well, the ROA tells you the efficiency a company uses all its assets to make the company profitable. Yeah, that's what a ROA is. And then they say the ROE. Well, the ROE tells you how much cash profit, how much profit the company generates for guess who? The shareholders. Yeah, this is a great company, you guys. Yeah, because the ROE is 83.39%. Huge. Let me say that. The ROE tells us how much profit the company generates for its shareholders. That's me and you. And the Bulls also say they got free cash flow growth. The free cash flow growth is strong and accelerating. The Bulls say that the AI 2nm chip and advanced packagings guarantee long-term demand. Yeah, there's going to be a big time demand for this company long term. So you guys get in now, y'all just sit back, buy on the dip. You're going to make a lot of money long term. And guess what analysts say about this company? You guys got to believe this. Analysts overwhelmingly rate KLAC not just a buy, but they say that this is a strong buy. You guys need to buy on the dip. Double and triple your $40, your $50, your $100, your $10. Buy fractional shares in this company, and you guys are going to make a whole lot of money. This is one that you can just count on. Now, this is not financial advice. I don't give financial advice. I just break a company down and let y'all see some stuff, okay? The Bulls believe that KLAC is the backbone of AI. They say that it's the backbone of the AI revolution. So why should young adults care about this particular company? It is rather expensive, but fractional shares, hey, they go up 80%, you go up 80%. You know, they go down, buy some more. Okay, but why should young adults even care about this company? Well, this is the type of company, you guys, that quietly compounds wealth. Yeah, you just get in it, stay in it, buy on the dip, and watch your money compound. I want you guys to think about this is the type of company that dominates a niche with no real competition. How you like that? How you like to be the big dog on the block with no competition on what you do? This is what this company does for you guys. No competition. And as long as technology grows, KLAC grow. And guess what, guys? Technology ain't going nowhere. We're just at the beginning of the AI boom. You guys that get in now, you guys gonna be good. If you believe in AI, if you believe in robots, if you believe in EVs, cloud computing, and smartphones, you already believe in KLAC. You just didn't know it. And I'm glad you guys came. If you like these type of videos that's giving you good information on great stocks that you could buy and put in your portfolio, you guys do me a favor. Hit the subscribe button, hit the like button, share them out to your friends. Let's build a community of young investors, that's looking into the future so we can change our last name from a liability into an asset. We're going to go ahead and look at the charts here for a little bit. Yeah, we're going to go ahead and look at the charts. But before we get into the charts, guys, I always want to teach you guys about the fear index. The fear index right over here, guys. Yeah, this is what you call a fear index, in case you don't know. This tells us a lot about America. Yeah, and a lot about what the great investor Warren Buffett and Charlie Munger taught us. And they tell us that they have taught some of us understand this, and I want my young adults to understand this. When you buy stocks, it's better to buy when the country is fearful. Right over here. See, when the country is fearful, the index rolls back over here in fear. That means that everybody is selling out of the market because the market has went down to some of the all-time lows, and everybody gets afraid and they sell their shares off, and they get afraid. But this is the time that you guys need to be buying, because I teach my young adults we buy low and we sell high. But as you can see, just 3 weeks ago, we're going to, I'll say the beginning of April, the fear index was down here at 35. See that? And then we've been tracking it all the way for the month of April. We're getting ready to go into May. Look how the money has come back into the market. And now we went from fear, but guess where we at right now? Boom, 65 greed. Yeah, 65 greed. That's kind of telling me that the American people starting to get a little bit more greedy, and they're starting to put their money back into the market. And I'm not telling you guys that we out of the woods. I'm telling you to buy on the dip. So if it drop back down to 50, back over here, buy you some. But this is really the last time I'm thinking you guys gonna see it right here, because we're headed towards December, Christmas, and we know everybody's gonna be spending money in Christmas. So this thing they could get real greedy over here. And when they get real greedy over here, that means the stock is gonna go even higher, okay, over here. And when they get over here, hey, everybody's gonna be trying to jump in at the last minute, ride the wave. But us young investors, we done already made our money. We're gonna start pulling our money out, setting it to the side, because the market goes up and the market goes down. Well, if we pull our money out over here, guys, put it to the side, when it goes back over here, you can buy this same company again and ride the wave back up. This is not financial advice. This is just some of the tips that I give you guys. Now, let's just go ahead and look at the charts. I always like to take you guys to the charts to show y'all where this company was under the Biden-Harris administration. I'm going to go ahead and open it up. It'll open up for me. There it is right there. It opened. Woo-wee. Look at that big drop, guys. Look at that big drop. Yeah. All right. Look at that high up there, 1828. 1828 up there at the top. But that ain't the high, because I'm gonna go back 1 year. We always like to go back 1 year. And I got some of this stuff marked off just 1 year ago. We saw it all the way up there at 1939, 36. You see that? That was just 1 year ago. That was right after the Biden-Harris administration went out of office. And after the Biden-Harris administration, we saw the trickle-down effects, what the Trump administration has done to us. But A year ago, you could have got this at under the Biden-Harris. You could have probably got it at $669.13 and rode the wave all the way up there. Let's go back. I always tell you guys we go back a year, then we start bringing it up to date. Let's look at year to date. Year to date, it still was under the Biden-Harris administration. You guys can still see it. You know what I mean? We going left right now. Yeah, we going left in year to date. We was down here at 1248.93, $1,248.93. That's still almost a $400 run up to the top. Then let's look 6 months ago, guys. Boom, we still see the all-time high, 1960. And we can see we're really in Trump territory, President Trump's territory right now. And we see, shoot, 6 months ago, you got it at an all-time low of $1,000.70. You'd have bought it then, you'd still be making money. 6 months ago, you'd be up, right now, if you bought it 6 months ago, you'd be up $800 a share. Okay, that was just 6 months ago. Okay, now 3 months. Let's look at the turnaround. You still got it 3 months. You still see the all-time high. I want y'all to notice how we still in this range between 1960, 50, and I marked it off back there. Let me look back there what it was. We had fell before that. And a year ago was 1,200. That's still that range right there. Okay, but let's look back at that month ago. All-time high is still there. Month ago, you could have got it. If you would have got in, you could have got in at 13. But I want y'all to notice it was at 12. It was at 1,000 3 months ago. Shoot, if you'd have bought it 3 months ago, you'd have made a $369 gain. Okay? But now, just a month ago, it's still above that $1,000 I just showed y'all earlier. Okay? It's still above there. So you'd have made profit if you'd have bought fractional shares back then. Let's go ahead and bring it on up a little bit closer today. Okay, boom. 5 days ago. We're coming back to the right now because we're bringing it up to date. And I want you guys to see. Look at the trend 5 days ago. It ran, you guys, and it crossed over for the first time, our all-time high, back under the Biden-Harris administration. It crossed over. Y'all see that? Let me go ahead and put a pin there for y'all to see it. Yeah, let me go ahead and let me do this. Let me put a pin there so we can see this bad boy. There's a new all-time high, guys. Right there. 5 days ago, it ran all the way from the 8s all the way up to 9. We still in war, are we not? Let's look at one day. Let's look at today, matter of fact. It ran, check this out, guys. It opened up at, let's open it up, find out what it opened up. It actually opened up pretty good today. It opened up at 1840, and it's dipping again, guys. It's dipping again. Look at it. It's dipping. It opened up today at 18.4. And let's go ahead and open it up a little bit. This is going to be probably the last time y'all can get it. It ran all day today. All day today. All day. It tried to rally at the around 2 o'clock. Let's see, 145, 150, 230. It ran all the way back up to 1802. Okay, let's see what it closed at today. Kept running. It closed today pretty high. Let's open it up. It closed, it ran sideways at the end of the day. And guys, it closed at 1828. But guess what happened right after hours? Huh? Right after hours. The bears stepped in. And look at the trajectory down. They start selling off. They start selling off. And right now, guys, today, they're still selling off, going back down. It went from 18, it's been sold down to about a couple $100. I see it at right now, if you just really open it up real good, we're sitting at 1635. Right after hours, it fell 165 bucks somewhere there, right after hours. Uh, I would like if you guys catch this in the 15s and the 14, put a little bit in your portfolio. You know what I mean? Like I say, the run is not here yet, but I showed you guys the fear index. The money's coming back into the market. You know, great investors right now are just sitting back because they're already in and they're going to just ride it out. Ride this out to December. They got in way back there, probably at $1,000 a share, but it's up. It's still up. Another $600 there. I'm thinking by Christmas. This is not financial advice, but this probably be about 2,000. It might even break over the 2,000 mark because we saw a high just back here. We saw a high of what month? 1 month ago. We saw a high of 1960, which really was a new time all high. And we always know that every company out there always is trying to go to a new time high. We've already hit a new time high. It dipped back down under after hours. This is a great company that you guys need to be buying fractional shares in. Not financial advice, but put this in your portfolio. Now, if you like these type of videos, you guys subscribe, like these videos, share them out to your friends. Yeah, share them out to your friends and you young adults, buy fractional shares in this type of company. This is the type of company that you guys don't have to worry about losing your money. I don't care where you put the money in. You can put the money in now. If you're patient and you sit back, KLAC is the type of company that's going to make you a whole lot of money. This is not financial advice. I just tell you guys and show y'all on the charts so you guys as young investors can make informed decisions. If you like these type of messages, again, dig through the arcades. And I just got great companies with great balance sheets on there. So you guys don't have to start off trying to buy penny stocks and all that stuff. No, put your money with the big companies. That way you don't lose your money. Talk to you guys soon. Love every one of you guys. And go over to, when you get on YouTube, go over to the post and look through the posters, and I got some information that I'm going to be putting out pretty soon for all subscribers of this channel. Talk to you guys soon.